Hey, good afternoon, everyone. This is Sam, and I'll be doing the free video for June 5th, 2020. So, in this video, I'd like to quickly run through a major index, a major interest rate, and volatility. If you guys caught my Monday state of the market, this is the same thing that we did, but now it's the end of the week, and we get to go back and see how it all played out. So, let's dive in. We're going to start here with the SPY. And keep in mind, I'm going to show you three big picture things that all connect, and then I'll share a couple of ideas with you at the end. So SPY here, I'm going to make this one pretty quick because, well, it's above all the resistance. So the last Fibonacci that I had on SPY, roughly 313 was the last fib that I had. Now officially it's gotten over that last Fibonacci. This 618 is the major one. We got over that one about a week and a half ago, 2 weeks ago. And now it's gotten over the 786. So that opens up the door very clearly for 339, which is the previous high. If not 339, then a very, very close test, 338, 337, right in that ballpark to retest the highs. If you look over here on the far left where the weekly is, this is a weekly chart. You see how you have it kind of looks like a smile underneath the squeeze histogram. That's incredibly bullish. One other thing that I can tell you is really bullish is this indicator right here, which is my trend indicator. You see how the red line there is swooping down towards the middle line, finding support and now turning back higher. So you see how the angle was down. It slows down, flattens out at 0, which is perfect, and now it has a little bit of an upward bias. That also creates a smile structure. So really, really strong stuff here in terms of the weekly chart on SPY, and it does open up the potential for a retest of this previous high. At the same time, you want to be mindful of your risk. At this point, we're about 100 points away on the SPX from back to support. So I have support roughly from the 8 EMA to about 313, which was the previous resistance level. So even if you were to pull back to the conservative support, that's still $7 lower. So you do want to be mindful of your risk. The weekly chart has a lot of potential here, but at the same time, getting in closer to 313 or the 8 EMA is going to be a much better entry. So SPY on the weekly looks quite bullish. Let's look at two more things that will either confirm this or might raise a couple of flags. So here we're looking at TNX. This is the 10-year interest rate. And keep in mind, as this chart goes up, this is the interest rate going higher. So things like TLT, which are interest rate sensitive, would be going lower if this chart goes higher. Now the reason I show you the interest rate here is because the interest rate going higher has been a very strong tailwind for the market. Right? It's something that's been very, very bullish for equities, specifically the things that have been beaten up the most. So small caps, banks, energy, anything that was airlines, anything that was really beaten down during the COVID scare, the interest rate going higher really benefits. So we just looked at the index. Let's look at the interest rate to see if it confirms. Keep in mind, up here is bullish on stocks. So let's do the same thing we did on the other one. Start with the weekly. You see how this looks like a giant smile structure? That's really bullish. You see how the red line here almost hit the floor and now is kicking off the floor and going higher? That is very bullish. You see how it makes a smile structure here. And also you see here on the slow stochastic the exact same structure coming off the floor. Very, very bullish and lots of room to potentially run and test this 50 moving average on the weekly. If it did that, the IWM and the Dow and the S&P would likely outperform tech. That is not common, but the interest rate has a huge benefit to those other three indices. So from what I'm seeing here, this is also very, very bullish through the interest rate. Let's take a look at Vixx. So Vixx is the third part, and you want to see the Vixx going lower if you want the market to go higher. And we are continuously seeing that. And not only that, but it has room to go even lower. So right now the VIX is trading at its 200-day simple. However, it's trading there with really bad momentum, and that's not a good position to hold. So on VIX here, you are at the 200, but your momentum and squeezes are totally active and totally facing lower. Most concerningly for VIX, and keep in mind, lower here is bullish on stocks, so it's not really too much of a concern. But you see over here on the weekly time frame, everything went from a frown and is now going into a smile, trying to, but it's so far away from even beginning the structure here. You're just 2 bars down. Typically, you're going to do something like this. And as this starts to carve out, this implies lower prices on VIX and would imply higher prices on equities. So we looked at SPY, and it was quite bullish, especially on a weekly. We looked at TNX, which is the interest rate, and it was also quite bullish, which is bullish equities, up to a weekly chart. And now we're looking at VIX, and it's telling us the same thing. So we're looking at 3 major products, and they're all telling us the same thing, that the markets are very, very strong here, and pullbacks to the moving averages on the daily time frame are most likely to be bought. So I'll close with a couple of picks from the room. 2 names that we are all pretty active in right now are NVIDIA, NVDA, and Microsoft, MSFT. Keep in mind, however, that everything that we've talked about in this video really does favor the reopening trade. So, you know, the more beaten up something has been, probably the better it will do. Things like casinos, airlines, hotels, anything having to do with service or hospitality should do decently well, given the 3 factors that we've looked at in this video. All right, guys, that's my time. I would like to let you know that I'll be having another webinar coming up next Wednesday. So if you want to catch the previous one that I did yesterday, go to simplertrading.com/money. So simplertrading/money, and you can watch the the replay from the one that we did yesterday. I also advise you to check out the state of the market that we did on YouTube. So check out the replay there, simplertrading/money, and we're going to be doing a deep dive into everything that we've talked about in this video and how to basically incorporate that into your trading. So if you guys are interested in that, check that out. Aside from that, the 3 things that we looked at in this video all favor the upside. The only caution is that we are quite far away from a buy zone in terms of a pullback to the moving averages. So keep an eye out for that on the indexes, and it all looks pretty good to the upside. All right, guys, hope this was helpful, and I will see you for the next one. Cheers.